The Australian Financial Review.
When Australian Financial Review reporters feel like there's more to a story, they embed what's called a tip box in their article. It's a way for readers with relevant information to provide it securely. They can leave their contact details or remain anonymous.
Look, it's a bit hit and miss, but when you're writing a story and you don't have all of the details and it's a bit sensitive, it's worth a shot.
So when Angira Bharadwaj and Joyce Moullakis wrote a story earlier this year about compliance issues and staff exits at CBA's home loan unit, they added a tip box.
We put it about halfway down the article and it worked. We had some people reach out to us anonymously who said, you need to dig a lot further. This is just the tip of the iceberg.
Angira and Joyce didn't need much prompting to dig further. And with the help of courts and crime correspondent Max Mason and some guidance from the tipsters, they uncovered a much bigger story.
Commonwealth Bank has reported itself to police over $1 billion worth of possible mortgage fraud.
Could be the biggest ever case of bank fraud in Australia.
How have so many fraudulent mortgages been allowed to happen?
Now the financial crimes regulator is trying to work out just how widespread the mortgage fraud is. Welcome to The Fin. I'm Lisa Murray. This week, Angira Bharadwaj and Joyce Moullakis on why CBA ended up in the middle of a $1 billion loan fraud scandal, how it's spreading to the other banks, and who might be behind it. It's Thursday, April 2. Hi Angira, hi Joyce, thanks for coming on the podcast.
Thanks for having us, Lisa.
Hi, Lisa.
So Angira, this has turned out to be a really significant story, but in the beginning it was about some unexplained staff exits. How did you and Joyce go from covering an emerging HR problem at the Commonwealth Bank to a $1 billion loan fraud scandal?
So I started hearing at the start of this year that there was some staff turnover at the home loans unit. This is one of the most important parts of the business because they're really trying to grow their first-party loans, not ones that have been written through brokers. First-party loans are about 20 to 30% more profitable for the bank because you don't have to pay those mortgage broker fees. Now, CBA's home lending unit is the country's most dominant with about 25.4% of the market share. We'd heard that about 20 staff had left, some had left to become brokers, others had gone to rivals, and it had also lost its head, who'd been there for a long time and was really well regarded within the bank. All of that change just set tongues wagging, and we wrote a really straight story about basically this upheaval within this crucial unit. This was around mid-January, and then I was talking to Joyce around the office about my CBA story, and she mentioned that she had actually heard that there had also been compliance issues at the bank as well.
So Joyce, what were the compliance issues?
So basically it all related to CBA's referrer program. It's a program where accountants, solicitors, lawyers, conveyancers, real estate agents and even financial planners can introduce their clients to the bank for a mortgage. And in return, the bank pays a commission. The commissions are generally one-off. They're lower than are paid to mortgage brokers because it is basically just an introduction to the bank. And typically, the commission is 0.3% of the loan amount that is drawn down. Now, the banks pay that after the loan settles. So we ended up speaking to about 3 people who had an idea of what was going on and spoke to us anonymously. And they said CBA had reported potential fraud related to some of these loans to the Australian Securities and Investments Commission. So we basically knew something wasn't right in this mortgage referrer program. We also found out that CBA had introduced changes to the referrer program as a result of what it had found. So that sort of indicated that the bank also felt that this was a serious issue. CBA revised the program and basically now it won't accept leads from these sorts of business people and real estate agents that are related to customers that don't have an existing loan with the bank and have had the facility for at least 6 months. So they've put in some guardrails there. Angira and I wrote a story about the potential compliance and fraud issues in mid-February, and that's when we added the tip box and soon after worked out that this was a much bigger issue than we thought.
So, Angira, what have been going on in the background? Were the tips helpful?
So we use those tips to run things past our more verified sources, people we knew within the bank who we trusted and we'd spoken to previously. And they were able to verify that this roughly $1 billion fraud did exist and it had been looked at within the bank. We also ended up getting a hold of 2 whistleblower complaints. So CBA, like all the other banks, has an internal whistleblower program called Speak Up, where staff can either anonymously or with their details raise concerns about anything they see. We confirmed the legitimacy of those documents with the bank to make sure that they weren't, fraudulent. And we worked out that these were received in February 2025 and September. Now, these reports raised that there were people that they were aware of who were using fake documents to secure loans through the bank. It's important to point out that this was not directly related to the $1 billion loan fraud, but it pointed to the fact that there were staff within the bank who were concerned enough about this sort of thing going on. So it was clearly being raised.
And Angira, when you say fake documents, what are you talking about?
There's a few different types of things going on, and this is a very live investigation, so I'm sure we'll discover more means through which people were conducting this kind of fraud. But some of those examples included fake payslips generated through AI, fake companies, they're called shell companies. They basically look like they've been operating for at least 2 years and generating an income, but they're not. Fake tax returns or draft tax returns, so they're not your final ones, but they make it look like that's what you're going to be submitting to the ATO. So those were some of the ways that these fraudsters were using to try and secure loans.
And all of this has been supercharged by AI, hasn't it? Because it's just so easy to make these documents now.
I think so. So I spoke to Sean Quagliani, who's the CEO of Futuro, which is a firm that I think about 45 banks in Australia and other lenders use to try and catch this kind of fraud. And he was saying to me about 18 months ago, if you asked ChatGPT to create you a payslip, it would just give you Python code. Now, if you asked, it would give you a downloadable PDF that's good to go. So it's becoming very sophisticated and very, very quickly.
And so when did CBA start looking into these issues?
So we found out that CBA started really investigating this after a story broke in July in The Age and the Sydney Morning Herald about the Penthouse Syndicate, which was a crime syndicate that was targeting National Australia Bank in what turned out to be a $150 million fraud. We then found out that in September, CBA received a second whistleblower complaint about the use of fake or dodgy documents to secure loans. And in some cases, those documents were being created with AI. That means that there's been discussion within the bank of this issue being raised. And when we started to dig deeper on the fraudulent documents, we found out that there was a much larger scale mortgage fraud that had taken place. We found someone to confirm that the brokers and referrer programs that Joyce had been hearing about were being used to approve loans with fraudulent documents. We had a sense that this was in the order of at least $1 billion, and we did have sources confirming that. CBA confirmed, like I said earlier, that the whistleblower reports were legitimate, but banks are usually limited in what they can say about those internal reports. So we didn't really have a full picture. That's when Joyce and I started talking to Max Mason about where this story was going.
Angira came to me. They had this great story about CBA and alleged loan fraud, and they just needed a little bit of sort of firming up with the story.
And if there was any way he could work with his police contacts to just firm up what we had heard.
So I started calling my contacts through various police forces and found out that it had been reported to the New South Wales Police.
And that there was this potential $1 billion worth of loans that had been secured fraudulently.
I spoke to them and they sort of said, yeah, that number around $1 billion sounds about right for CBA. Interestingly, I was told around this time that it could be even bigger than that and it could be spreading to other banks, but at that stage we just didn't have that information. Around the same time, I was also being told it was coming from a certain geography, was the language used, which we later found out was China. And at this stage in February, all of us thought this was still a continuation of the Penthouse Syndicate, which was a story that had broken 6 months earlier.
Well, it's been described as one of Australia's largest fraud syndicates
that had come to light in July 2025.
A senior NAB banker is accused of being on their payroll.
So the Penthouse Syndicate was this crime syndicate in Sydney that defrauded NAB originally what was thought $150 million.
Sydney banking manager has been charged in connection with one of the largest fraud cases in Australian history.
And police say that this syndicate built an empire of luxury property with that money.
The former NAB employee is accused of helping the Penthouse Syndicate acquire business loans worth millions of dollars.
The alleged ringleader, Shanghai-born Michael Bing Lee, was arrested in July in the penthouse of Crown's Tower at Barangaroo, where he was apparently running the entire syndicate from.
Police have raided a multi-million-dollar Sydney penthouse as part of a major investigation into one of Australia's biggest alleged frauds.
And that's where the syndicate got its name.
He was using corrupt solicitors, real estate agents and mortgage brokers to help snap up millions of dollars worth of property around Sydney. And here's where one of the big banks comes into the picture.
We believe this high-profile case is what prompted CBA to start taking a look at the issues in its own loan book. CBA swears black and blue that that's not the reason that they started investigating, but it just doesn't line up with the timeline. Clearly, when the first arrest happened with Penthouse and Michael Lee in July, they started looking and realised, we've got a problem. So I got off the phone with my contacts and I texted Angira and Joyce saying, we've got a story. We're on.
So, Joyce, you got the text from Max. He confirmed that CBA had reported itself to the police and that while there might be some potential overlap, this was a different fraud to the Penthouse syndicate. And that's when, at the end of February, the three of you wrote the story that the Commonwealth Bank, the largest company in Australia, the gold standard of banking, was in the middle of a $1 billion loan fraud scandal. How did that go down?
Well, not very well, as you can imagine, Lisa. So after the story ran, and also I wrote a column published on the same topic, there were a spate of calls between us and CBA as the bank digested the coverage.
Commonwealth Bank has reported itself to police over $1 billion worth of possible mortgage fraud.
Could be the biggest ever case of bank fraud in Australia.
So, Lisa, there was a lot of sensitivity around this topic. CBA were very insistent that they had kicked off their investigation prior to the Penthouse syndicate news breaking. We were of the view that, and we stick by our reporting, that the review CBA was conducting really ramped up after July. It's really important to put the $1 billion loan fraud into context, and CBA's total mortgage portfolio as the biggest home lender in the nation is $659 billion. So they're not necessarily losing $1 billion CBA in terms of this sort of scandal. The loans were actually being paid down. Now, that doesn't mean it's not a huge problem for the bank, because it does speak to its systems, the bank's ability to detect fraudulent documents, and whether CBA is actually complying with its legal obligations. So we reported that CBA was working with authorities to assess the number of loans that were based on fraudulent documents, suspect deposits or shell companies. And basically 5 people with detailed knowledge of the investigation said CBA had assessed its loan policies last year, and it was looking at in-house lending channels such as branches and mobile bankers, but it was largely focusing on mortgages introduced by brokers and referrers. They are the real estate agents, accountants and lawyers. Not long after, the story became even bigger. We found out that some of the customers had actually taken out loans with other banks. So that meant there was at least another $1 billion that could be sort of tied up in this whole mess of fraudulent loans and customers who were gaming the system, getting loans illegitimately. The real fear was that this issue was becoming systemic across the sector, and that creates a big headache for regulators and the police.
We're talking about the $1 billion loan fraud scandal that prompted CBA to go to the police and the corporate regulator. Angira, earlier this month, you, Joyce and Max reported that this isn't just a CBA problem. How widespread is this scandal?
So in addition to the police investigation, CBA also commissioned an internal review by Equifax, which is one of the world's largest credit bureaus. And what that uncovered was that the customers had taken out multiple credit products across other banks, and that they had taken out loans that amounted to at least another $1 billion across ANZ, Westpac, National Australia Bank and Macquarie. Our 5 biggest banks have now been ensnared in this.
Well, on that point, CBA's retail banking chief, Angus Sullivan, was actually asked about loan fraud at the AFR Banking Summit last month, and he was really quick to point out that it wasn't just a CBA problem.
You know, fraud is an industry-wide issue. It's a long-standing issue, and we're very focused on making sure that we run it to ground and make sure that we keep a focus on minimising and removing that from the system.
But he said it's an issue that all the banks have to deal with, and that might be by going straight to the source for data like bank accounts and the ATO.
I think one of the implications from what we've seen is we will have a pivot, I would expect, from documents to data. A document is not that hard ultimately to falsify.
And then we found out on March 16, AUSTRAC called a meeting with 10 banks and it served them with notices to provide detailed data around their loan books. So AUSTRAC, the authorities and police can really try and piece together how systemic this issue is. It doesn't mean that these banks are definitely affected by the scandal, but the list of invitees included CBA, Westpac, ANZ, NAB, Macquarie, HSBC, Suncorp, which is owned by ANZ, Bank of Queensland, and Bendigo and Adelaide Bank. AUSTRAC is now trying to figure out how widespread the mortgage fraud is and whether properties that have been funded through proceeds of crime should be seized.
And Joyce, in the meantime, what's happening to the properties?
The concerns are here that the proceeds of crime are being used to finance these properties and launder money. And that basically means using the banking system to make illegal funds legitimate by using them through a loan repayment. Authorities can seize the property. So it's a little bit too early to kind of know exactly what will transpire. And that's the sense I got when I spoke to the AUSTRAC CEO earlier this month. AUSTRAC is still getting to the bottom of what's been occurring and trying to understand how widespread the problem is. Bank sources are telling us that the typical course of action is if the bank still has debt owing on that property, AUSTRAC is likely to let the bank sell it to repay the loan, and any additional funds obviously will be held by authorities.
And Joyce, who do we think is behind this fraud and why are they targeting Australia?
Speculation is sort of focused on China as one jurisdiction that the money is coming from. Some analysts have also suggested it could be people trying to get around the capital controls. So China restricts the amount of capital Chinese residents can take out of the country. Now that may create the need for them to come up with fake income statements or shell entities to facilitate capital flows into Australian properties.
But there's also speculation of a more sinister reason, which is potential money laundering. This is partly linked to concerns that Australia has been behind other countries when it comes to regulation. The federal government is introducing what's called anti-money laundering tranche 2 reforms. They'll come into effect around July this year, and they make sure that the obligations to report suspicious activity extends to lawyers, real estate agents and accountants the same way that they do to banks. If they think their clients are doing something suspicious, they will have to report it.
Angira, this is a sector-wide problem, but it has taken some of the gloss off CBA in that the bank didn't pick this up until now. What are the ramifications for the bank?
So there isn't a dollar value loss for the bank, so it's not out of pocket $1 billion. As the mortgages are being paid down, they were secured with very large deposits and they can be sold to recoup some of that debt. But at the end of the day, large-scale fraud, even if it is a small portion of their mortgage book, just points to, are there issues within their lending processes? Is there something that they need to look at that they're doing wrong or that they're not fulfilling their legal obligations? So the risk really comes from whether the watchdogs think they've done enough.
Why wasn't this picked up?
Exactly. And if the systems are in place to prevent this in the future. There's also the risk of a penalty. Some analysts say that that's likely to be limited because CBA did self-report this, but that risk is still there and it could come from AUSTRAC. AUSTRAC has taken similar action against banks in the past when it comes to AML breaches.
And will this scandal take some of the heat out of the hyper-competitive mortgage market as banks get on top of these issues?
The big 4 banks have been particularly competitive over the past 18 months. 3 out of 4 of them have new CEOs, but we've also had a disruptor in Macquarie, which has been taking more and more of the mortgage market share every month. But I think in the wake of this being an industry-wide issue, they are all going to have to rethink their practices and maybe prioritise compliance over just competition. If this international money is found to be tied up in the Australian property market, it'll also be interesting to know what this means for the average consumer. It's already pretty hard to get a property in Australia. It's a tough market, high interest rates. If banks then change their processes, it might then add another hurdle for the average person wanting to get a home loan.
It's important to remember that NAB got into a lot of trouble around its referrer program during the Royal Commission in 2018. And that really sparked NAB and Macquarie, who looked at this issue as well, to get rid of their referral programs over 2018 and 2019. Now, for NAB, it was a massive issue. They had a fraud ring basically operating out of Western Sydney, where branch staff were accepting bribes to sort of look the other way and help facilitate these loans being approved. Back then, there were brown paper bags of cash being handed over to staff. All sorts of things were happening, to the point where NAB just said, we're scrapping this entire thing. It's not worth the risk. And Westpac had issues with its mortgage broking business RAMS via the home loan franchisees and eventually shut them down. The fact that CBA and Westpac, ANZ haven't shut down their referrer program sort of speaks to the fact that they don't want to. They want to have every lever they can to grow their mortgage book because it is hyper-competitive.
A final question for both of you. What happens now with the investigation, the fraudsters and the banks?
I think what I'm most interested to know from here is, what are the smaller banks thinking? I mean, CBA is one of our biggest companies, not just one of our biggest banks. It's got a lot of investment in its technology. It's able to catch these things and self-report. I'm wondering what's happening at the smaller banks, because if this fraud is as widespread as it seems to be, they won't be spared. That's probably where the investigation's likely to head from here. And I think the other point is, what does AI mean for all of this? We already have seen AI fast track some of this fraud and make it a lot easier for you and I to go create fake payslips if we wanted. So banks will really have to up their investment, and whether their bottom lines can handle that is also something we'll need to see.
Well, this really has a long way to play out, I think. It's a hot button issue for the banks. We can't really forget that in 2018, CBA was fined $700 million by AUSTRAC because of vulnerabilities in their anti-money laundering systems when criminals were stuffing large amounts of money through their so-called intelligent ATMs. So there could be regulatory repercussions here. It's still really early. We don't know. AUSTRAC's working through reams and reams of data from those 10 lenders that it served notices to. So this has got a long way to play out. But, you know, we do, as consumers of mortgages, want to know that our banks are on top of this and they are closing the loop and criminals aren't sort of taking advantage of our home loan market. And in terms of sort of international criminals, AUSTRAC and the police have to determine how deep this problem is. Is it just high net worth individuals trying to get money out of China? Is there an organised crime element here or something else? Will we see arrests from this? I mean, there are so many avenues of investigation that are still happening as we speak.
Thanks, Angira. Thanks, Joyce.
Thanks, Lisa.
Thanks, Lisa.
Thank you for listening to The Fin. I'm Lisa Murray with Joyce Moullakis, Angira Bharadwaj and Max Mason joining the podcast today. To read more on the Commonwealth Bank home loan fraud, click the links in the show notes. The Fin is produced by Mandy Coulin. Head of audio is Alex Gow. Fiona Buffini is head of premium content, and our theme is by Alex Gow. If you enjoyed this episode, send it to a friend, as it helps others find us. And follow us wherever you get your podcasts. For more stories about markets, business and power, subscribe to The Financial Review at afr.com/subscribe. See you next week.
The Australian Financial Review.